Hello, everyone. This is your update for October 30th, 2023. We're going to start with gold, touch on silver, platinum, S&P 500 futures. I'm going to hit the 10-year Treasury yield, and then we'll end with the Japan JGB 10-year bond. So right now we're looking at the gold daily futures chart. Prices are trading at $2,004. They're basically within the range from last Friday. And again, we broke out above the trend line, and prices are heading higher slowly, which is okay. That's kind of what we want to see. I imagine what I'd like to see to confirm my bullish bias is a strong up day in the next week or so. Um, a strong close above 2000, maybe even 2040 within the first couple weeks of November would be good. To the downside, if we get a strong close below 1960, I'd be concerned. And if we got a close below the 1940 level, that would tell me that, okay, we're probably coming back to retest this breakout area or for a longer correction. Jumping over to silver. Silver, I put in this potential bull flag pattern here. So we had a nice run up here off the October low, and prices have been consolidating in what could be perceived as a bull flag. To confirm, we need to see a close above this day's high, which was, let's see here, $23.88. If prices break upwardly and we close above that level, that would confirm this was probably a bull flag, and I guess we more than likely would come back up to test the 24, 25, and maybe even $26 level here in November. Again, it all depends on probably what happens to what the Fed announces and the Treasury refunding. I was wrong. I thought the Treasury refunding was coming out today on Monday. It is not. It's coming out at 8:30 November 1st. So the day the Fed announces, it'll be out that morning, and we'll have to see how the market reacts to that. Over to platinum. I like the price action in platinum. We're up 2.76% today. Prices are trading at 1930 futures, and we're near this trend line. I don't know if prices are going to back off here and consolidate, but if we can get a couple closes above this trend line, say above the 940 level, that would support to me a potential upside breakout. S&P 500 futures, the daily chart. Again, we broke lower and prices are consolidating. I'd have to see a strong close above this. This is a futures again, the 42.10 mark for me to think that we might be putting in a local bottom and having a rebound. 70% of the time, prices will rally into a presidential election year. So, I mean, the odds are stacked against a further decline. I mean, 30% chance we see a deeper decline into that point. So, I mean, the odds honestly favor a bounce or a rebound, but the macroeconomic and all the things going on with the world, it's not a guarantee, and more downside is possible. So, I'm going to watch, see what prices. If we begin, if they hear something they don't like from either the Fed or the Treasury, and if prices continue to accelerate lower, say below the 4,050 level, that would be a little cause for concern. We'll have to see how that develops. Over to the 10-year. This is the U.S. 10-year Treasury yield. We're at 4.89%, and we're basically within this range. So we have support around the 4.80%, and on the upside around 5%. And we're going to break one way or the other, probably this week is my guess, but I'm not sure which way. It all depends on what they announce and how the market perceives it. If we do break above 5%, which I think is a possibility, that's not going to be good for the stock market, in my opinion, and that's not going to be good for banks. Lastly, I wanted to bring you over to the Japanese 10-year yield. So they've had a ton of yield curve control over in Japan for a long, long time. They used to keep the rate pegged at 0.5%. And in July, I don't know if this is a weekly chart, by the way. In July, they announced they were going to let it loosen the bands to a 1% cap. So, and they've been kind of controlling the rise since then. The question is, what happens if we get to 1%? And the Bank of Japan is also going to announce, I believe, in the next couple of days what their next moves are. And I wanted to point out that this interest rate structure looks like a really big rounded bottom, and 1% is very critical resistance. If something happens and it breaks above 1%, which I don't know if it's possible because they control the bond market, they just would print more currency to buy bonds. So, but there could be an exogenous event that prices spike, or I'm sorry, yields spike above 1%, and that could send shocks throughout the markets with the yen carry trade and all the currency trades that are based off of that. So I'm watching that. See, we got to see what they announce this week too. But right now it's at the yields at 0.89%, and we're creeping up towards 1%. And we'll have to see what happens. But there's a lot of things that can go wrong. There's a lot of things that can go right, and we're just going to have to take it one day at a time. That's it for now. All right. Bye bye.